Hi everyone, I'm Alistair Marsh, a reporter here with Bloomberg covering crypto. It's great to see such a packed room, and I used to cover the credit market, so I can tell you that panels about regulation in the credit market would never be this full, so this is it's good to see. I'm joined by a fantastic panel who can really elaborate on some of the things. I've got on my immediate left Marieke Flament, who's the Global CMO and EMEA Managing Director of Circle, a company we've just heard a little bit about. Brzezek to her left, who's phoned in this morning from Zurich, I believe, thank you very much, who made it on time, who's the CEO and founder of Crypto Finance Group. To his left, we have Hany, who's the CEO of Amun AG, a company that's just recently in the news for having listed an exchange-traded product for crypto in Switzerland. And to his left, we have Ryan Radloff, the CEO of CoinShares. Now, I wanted to start. Regulation is clearly a hot topic, as we heard in the introduction. And one of the unique and interesting things about crypto is that it doesn't really comply with the jurisdictional norms of other asset classes, i.e. there is no European Bitcoin, there's no US Bitcoin, there is just Bitcoin, which creates unique challenges when you're trying to regulate this, because it seems that there are different jurisdictions have taken different approaches. In fact, we have our audio-visual team have created a really interesting chart that shows how some of the, it should come up on here, that shows how some of the different jurisdictions have approached crypto and how that's affected the price over time. But one of the things, therefore, to discuss is, so if there are different jurisdictions taking different approaches to crypto, some being more accommodative, others being outright hostile, how can we talk, is it realistic for there to ever be a global standard for regulation? And is that something to aspire to, given the potential pitfalls of regulatory arbitrage? I hope throughout the panel that if you have a comment, please just chip in at any time. But Marieke, perhaps I could ask you first.
Yeah, sure. And so to put things in context, so Circle right now, we are 300 people. We have a range of different products that range actually from very retail, Circle Pay, Circle Invest. Some of them are touching crypto more or less. We've acquired Poloniex, which is an exchange, a crypto exchange. We did recently also the acquisition of Seed Invest, which is in the crowdfunding space, not in crypto. We have a trading desk between fiat and cryptocurrencies, Circle Trade. And last but not least, Daniel just mentioned that, but we also launched a stablecoin, USDC, with Coinbase. So for us, basically, regulation is actually extremely important. What you just talked about, Alistair, is actually the fact that there is a lot of arbitrage. And right now, as also mentioned by Daniel earlier, there's a lot of smaller states who are actually looking at how to make something of that. In our view, regulation is extremely important. Similar to what we've seen with the internet, the challenges are going to be on what to regulate, when, and at what speed. And yes, these technologies are completely actually global. So the challenge becomes what actually happens if you have smaller states or just like states one by one trying to take their chances on it. Over time, it would be ideal to have some sort of global view on everything. But even if we think today of the internet, I mean, GDPR is something that's very European-based, and it's actually not tackled by other states in the same way or the same fashion. So from our perspective, we actually think there is a lot of work to be done from an industry side, which is why we've also co-founded and worked on Global Digital Finance, which is a body I think we'll talk about a little bit more later, which helps at doing taxonomy, but also code of conducts, because actually if participants can self-regulate within that industry while we're actually trying to get to a state where it's more globally understood and globally regulated, it's great. In the US, we also work and we co-founded Blockchain Association, which we also believe is actually extremely important, same to build things in the right way. So in short, yes, today there is a lot of arbitrage. It's actually good to have people showing the way and trying to say, like, there is something here to be done. The real game will come also when larger states, whether in Europe, the UK, Germany, France, or others, are actually doing something meaningful, and then definitely the US and on the side of Asia.
Anyone else want to chip in on this? Jan, perhaps?
Yeah, I mean, we're working on regulation as well in several regulatory working groups with regulators. And for us, it was always very important to have the regulation certainty, because for institutional investors, they care a lot about it. So a pension fund, for example, he cannot invest in something which is doubtful that he's allowed to trade it or buy it and hold it. So that's very much necessary, not for retail investors, but really for institutionals. And then I think we will see. It's good. I completely agree. It's good that you have this competition between different smaller countries or the more advanced countries, because I don't think there's just one rule out here already who is a really perfect solution. So it has to grow and develop, and then they have a good idea and they are better and they did this better. So then in the end, maybe we'll have something. I mean, we have common standards in the financial system already with KYC, AML, so the broad overarching rules. Right. And then you can have country-specific, more clarified rules for crypto.
Okay, Hany, could you share some thoughts?
Yeah, so I think it's true that there's certainly no American Bitcoin and Chinese Bitcoin and Japanese Bitcoin, but that's also true of commodities, right? There's no American gold and Chinese gold and European gold. It's the same. And so I think if we think about it that way, it's not only probable, but probably inevitable that we will, as a global group, reach some sort of consensus, some sort of common set of rules. The other thing is that we're obviously very highly regulated. We checked in and spoke with 28 different jurisdictions around the world before settling on Switzerland, and we've had great conversations with countries large and small. And I take a little bit of offense when we sometimes dismiss smaller countries like Malta, like the territory of Gibraltar, like Cyprus. And I think that if we take a look at history, Canary Wharf used to be a global port. So did New York. And there were small upstarts like Rotterdam and the Port of Oakland that weren't as big of a deal. And so I think that history shows that what we perceive today as a certain standard might not be the same tomorrow. And in that, I would caution everyone to not just think about how the SEC and the FCA look at it, which is very, very important, and we very much enjoy working with them, but also I think the other countries around the world that might be dismissed a little bit can actually push the entire industry forward a lot more than we realize.
Okay.
Yeah, so to add to that, I think in the last 10 years, let's look at what we've done. What we do know now, after 10 years, is that Bitcoin is not a security in the United States, and it is not a security in the UK, which are two of the more prominent regulatory bodies that exist. Mm-hmm. I think it is healthy, as he said, to see some of the peripheral countries start to push the envelope in terms of showing that things can be done. You know, to hear the thought that I cringe right here that the market isn't ready for an ETF. I mean, we've been running a Bitcoin ETN for over 3 years now, just fine. So I don't buy that, and I never will. But if you take a step back and look at what we've done, I think the FCA is in some, here in the UK, in some areas they've taken some steps forward in figuring this out. In others, they've taken quite a few steps back. Mm-hmm. And I think the first thing they've done, which is good, is to delineate and define that Bitcoin as it is as an entity is not a security. So then we can build off of that. So now that we have that clarity on Bitcoin, that really helps. Mm-hmm. For the rest of the industry, I mean, look, we have a lot of problems in crypto, right? There are a lot of problems that we have created as an industry that we need to recognize that the issues that we brought about as an industry are going to prolong the definition of what regulation looks like, what it should look like, and we need to own up to that a little bit. Not saying anyone here on this panel or myself at all, but rather as an industry as a whole, crypto has been filled with a lot of issues with the ICO boom last year. People thinking that just because that you could add the word blockchain to something, you somehow fall outside of the construct of what we've defined in securities law, which is just simply not the case. In most cases that we're seeing, as the SEC has said. So I think what's good about this, as most of the panelists have said, is that we already have some regulation where we can retrofit this into. In the UK, you'll see a lot of regulation like the Fifth Anti-Money Laundering Directive introduced to exchanges, which will be a very healthy thing, right? So just similar to the gold standard, you don't need to regulate gold, but you can regulate the service providers that interact with gold. And I think that's an area where the UK is showing quite a bit of positive thinking forward. There's some other areas like how they're approaching exchange-traded products. That's a few steps back in my opinion, but we can come back to that later. So in all, I think the most positive thing in the last 10 years is that we've defined that Bitcoin is a security, or is not a security rather, and the rest of it we're still trying to figure out, right? And I think that will take some time.
Okay, I wonder if we could go back to some of the things that Hany, that you were saying. I mean, I guess there are perhaps different outcomes or different reasons why you might want regulation. But as we'll discuss in the next panel, not wanting to cannibalize on that, but one of the key reasons for wanting regulation is potentially to lay the pathway for institutional money to come into the crypto space, potentially. We can discuss that. But I wonder, is there really, if you're a crypto business and you want to be taken seriously, surely there's a difference between being regulated by the FCA or the SEC versus perhaps a smaller island nation or something, one of these smaller startup kind of regimes. Does anyone have any thoughts on that? I mean, well, Hany, I guess I'll go to you.
I think we have to take a step back and really think about who the audience is, right? And so that might be true for some institutional folks, but I think the initial promise of crypto has certainly been much more global in nature. And when we think about the amount of people that live in countries where their local currencies are not their preferred ones. Right. How many is that? If we just think about the currencies as being the US dollar, the euro, the British pound, the Japanese yen, and the Swiss francs, it's about 6 out of 7 billion people live in countries where that's not the currency. That's 85% of the world. And I'm not sure they are really talking about, is it the FCA or the MFSA of Malta? And so isn't that what crypto was started to actually do in the first place? So that would be my biggest issue with that. And I fully admit that might not be the case for some institutional investors, but I don't think that that's true on a global level.
I'll say, though, I'm a little worried about first of all, I think Switzerland is in a different category than Malta and Gibraltar. So before I say anything.
Thank you. Thank you.
But I'm a little worried about what I see going on in some of the peripherals. And I think that we could end up setting ourselves back a little bit. The concept of a little bit too loose canon regulation could end up hurting us in some of the larger G5, G10 economies that are actually talking to where a lot of the institutional money is. Right. And if you just open up the doors and allow the same bad stuff we saw back in 2017 continue there, it certainly doesn't look good on the industry, and it continues this issue that we've had of wild, wild west. And I think that we need a flush out of that to keep progressing. Mm-hmm. So I take the point. Switzerland, I don't put in that category. I think FINMA has been a leader in a positive way, not a negative way at all. And I think there's some others that I have a lot more concerns about.
But I would say also, the problem is that thinking that the crypto world can work on its own, it's just utopian. You still need banking partners. And actually, most of those banking partners, for example, we work with Barclays, where you are regulated is more than just that. It's actually what are the triggers and the KYC and AML that you're going to put in place to just be able to work with those partners. So I think, regulation helps also on that side, which is who can you work with, and it helps a whole market. If you actually have the FCA, which is actually engaging, then you can give some sort of trust to partners who actually still need to serve the fintech and the company that are trying to do that. Because to give examples also, for example, in France, some of the ICOs that were there had to move and to go somewhere else because no bank would ever touch them. That's a problem, because if you start seeing everything going out and going to other countries to actually just have a simple banking account, then you have an issue. So I think it's definitely important. I think it's good also to see some larger countries just step through and basically show the route to that. But I would also not discredit the work that others are doing, because if you have no one starting, then basically everybody's waiting. But yeah, for trust from a consumer perspective, just for trust, for being able to work in the ecosystem, otherwise you can just not work on your own.
I think in practice, though, and Jan will totally be able to back me up on this, I agree with you that there are certain countries that are better or worse from optics standpoint, but I'm not sure that will help in some regards with respect to banking account. I mean, Barclays, aside from a very, very large crypto company, Barclays is not open for business, and neither are a lot of the other banks. And as much attention as I think we in Switzerland rightfully get, and FINMA being forward-thinking, et cetera, we have a huge issue in Switzerland with banks, the vast, vast majority of whom do not want to touch crypto, to the point that now politicians are coming in and trying to do something about it, even with firms that are regulated such as ourselves. And so I do think that optically is very much a concern, but on a pragmatic level, I'm not sure that it ends up mattering.
Yeah.
I have 2 points. One is when we talk about what you raised before with what is the goal of crypto to include everyone in the financial system. So we have billions of people who are unbanked, so banking, connection, and all the regulations don't help there. I think there we need to find other solutions. Then for us in Switzerland, we are now the first crypto company in Switzerland being FINMA regulated with an asset management license. And I think that was another very important step for banks to work with us. When the second company in the trading business, we applied for a security dealer license, which we should get early 2019. So that's, again, one step after the other. And as we come from banking and finance, we speak the same language. We know the rules and regulations. We don't need someone else, a regulator, telling us the rules. If we just apply the same rules as we used to before, they don't have a problem with that. So they don't say, we need this rule in the book, in the law, that you can open an account. They come and check and do their due diligence on us if we apply their quality standards or not.
Just to say, by the way, that I'm not texting or checking my emails. I'm checking for questions from you. So if you'd like to pose any questions to the panel, please do. You mentioned, Marieke, earlier the idea of sort of self-regulation, like the crypto industry trying to impose standards now to regulate itself. And there's an exchange in the UK that uses this phrase to be preemptively compliant. I was at a conference recently where they said that. Do you think that that's an achievable goal to be preemptively compliant? Does that make sense to it now, or is it a bit of a waste of time because we don't really know how things are going to?
I think we all have a responsibility because at the end of the day, we touch people's money, right? And so with that, as has been mentioned already previously, there are already rules that are in place that you can leverage, right? Checking where your customers come from, anti-money laundering, and so on and so forth. I think it's also an industry duty to work with regulators to educate on both sides, right? And there are Crypto Task Force, Global Digital Finance, Blockchain Association. There is several groups who actually are trying to do that, which is this is a complex industry, right? It moves extremely fast. It's complex, and so it's actually figuring out what should be the taxonomy, what should be code of conduct, and actually how can we get to a place which makes sense, is both should come from the industry and then should be working hand in hand with regulators. So I definitely do think that there is a duty while there is nothing, saying, well, there is nothing, so I'm not going to do anything, I don't think it's actually responsible.
Right.
I think self-regulation is a very good thing if you're an independent asset manager, right? But in the back, don't forget, you always have a bank or a broker who does the checks for you and make sure that you have the access. So if there's a small startup who wants to set up advisory business for crypto, they can do self-regulation. That's not an issue at all. But as soon as we have large players like Circle or CoinShares or whoever, they need to stick to much higher regulations. Or duties.
Yeah, I'm not sure we have the luxury of self-regulating ourselves. I think CoinShares, us, Jan, Circle have all had to deal with some pretty stringent rules and requirements, and as a direct result of the kinds of products that we employ. So I'm a bigger fan of finding a jurisdiction where you're regulated in some way versus self-regulating yourself in another.
Mm-hmm.
Yeah, I'd agree with that. The thing is that we'll see if GDF is what she mentioned earlier. Global Digital Finance has developed this kind of global code of conduct with some very large companies in it that we're hoping to be as a blueprint to some other regulators to adopt. And same with Crypto UK, which is the largest UK's version of that. But it's too early to tell. If that will actually be material. But I would agree, there's areas that a lot of companies could seek out more regulation. Like here in the UK, there's a lot of companies that are offering derivative products without carrying a CF30 license. It's just not excusable. There's things like that where I know that they're avoiding it, and it's just there's just no room for that. So.
I mean, it's the same in Hong Kong with BitMEX, right?
Yeah.
I think overall it's important that there are no issues, that people break the rules or betray their investors and so on. If people we self stick to certain standards, then I think there's no pressure to come up with a regulation, right? It's the same. It was the same in the banking industry. They did their job, and then there were some issues, frauds, trading, misconduct, and so on. So they had to come up. The state only comes up with rules if they have to. And so I think that's a good approach.
But what we're what we're talking about all right here are the service providers. I think we're all in agreement it's very difficult to try to regulate Bitcoin as a global asset. But here's something that's really tricky that is kind of the dark side of this for all of us, is that when you apply, people don't really talk about the dark side of the AML story of Bitcoin. So what's about to happen in the UK is that all of the exchanges are going to fall under the 5th Anti-Money Laundering Directive, which, yay, we're excited about. But what happens then is that now the FCA and the regulators are going to start having a conduit or a portal into these things. And then they'll start to ask, okay, I need you to really give me a detailed report on this source of wealth. All right, and we, from a technology standpoint, we can easily implement zero-knowledge proof signatures on top of Bitcoin to make these things completely anonymous. It's not a problem on the second layer. So we're going to hit this strange, awkward place again, I feel like, in a few years, where we'll get UK exchanges under the 5th Anti-Money Laundering Directive, but then the technical innovations of the asset itself are going to bring a whole series of complexities in 3 to 5 years, because you can make Bitcoin transactions completely anonymous if you'd like to. We know how to do that on the second layer of Bitcoin. So it's going to add, this story will not end just by adding the same AML standards as what the banking system's provided, because the ability to look through and provide source of wealth will be virtually impossible in a couple of years once you add those certain technological layers on top of Bitcoin, like we see with Zcash, Monero, and others. These are things that all can be implemented on the second layer. So that's, that will be a tricky thing for us to cross. For now, it's like it's building blocks, right? So let's at least get some coverage so that we can play with the big boys, and then from there we'll figure it out as we go.
But I think especially because of that, we really have to talk about as much as we are interested in regulations, as much as we take attention to it, there has to be enforcement actions against the myriad players that aren't. Because otherwise, what's the huge point?
I think I agree with that, because today you actually see there's two schools of thoughts, right? There's one where actually you still play the cowboys and you run with it and you try to find where you can do most without having regulation. And then there is the other side, which is trying to self-regulate, or actually trying to do things in the right way and actually work with governments hand in hand and so on and so forth. That takes a lot of time and resources, and so in a way it also slows down the company who are trying to do that. So I agree with you. If there is also not at some point some sanctions or looking at it, like who is actually doing it right, then the incentive for doing it is not there. And we saw that it's hugely detrimental to the entire industry if you have actually ICOs going out there and doing things that are just taking people money away and running with it, then it's hurting like the whole trust in the industry. It's just making all of us step back. So it's actually a long road and it takes a lot of effort.
Okay. One thing that I'm interested in is whether all this talk about regulation is actually in some ways the antithesis of where Bitcoin came from, i.e. Bitcoin was created as this thing to exist outside of the government system, and now we're talking about regulation. So some people talking about it as in a way it will bestow credibility on crypto after a very rough year, after all the ICO scams. It will allow institutions to come in. I mean, do you think that regulation is kind of a necessary evil, a betrayal of where Bitcoin became, or really just the market? This is about it growing up, and this is where it was always going to go.
Can I start on that? Because let's talk about the UK for a minute. And I think we're proud of the work that the GDF and Crypto UK have done, because there's this delineation between and a definition of what a custodial wallet is versus open source software and permissionless innovation. So if you are acting as a fiduciary and providing services around the core-based monetary unit, which is a Bitcoin or some blockchain-based asset, and you are holding assets for others and providing services, that there is the regulation of service providers that needs to take place and is a natural part of an asset class's upward evolution. But the asset itself, yes, that is the notion of permissionless innovation that Bitcoin has brought, and the ability to regulate open source technology and databases. I don't see the UK, or really any other government for that matter, trying to regulate that. So it's an apple and an orange. And I think I think that's the healthy divide. If you're providing financial services to consumers, where you are a fiduciary of their money in some way, shape, or form, yeah, that is a healthy thing. In terms of trying to innovate and regulate a database, open source technology, and a base global monetary unit, that's a fool's errand that will keep changing. Trying to hold it's like trying to hold water between your fingers. It won't happen.
I agree with that. I think also the thing is that this is not about Bitcoin anymore, right? There are thousands of assets and projects and things happening out there. At Circle, we talk a lot about this tokenization of everything. It's not just money that's going to be tokenized, it's assets, it's actually pieces of art and so on and so forth. And if you look at that thinking that none of that actually will have some sort of framework anywhere, that's actually not very realistic, right? So I think we still get stuck 10 years after just on Bitcoin, but there's so much more that's happening. I think that's actually the challenge, is looking at the broader space, the impact it's going to have on so many different industries, verticals within these industries, and just society in general. And I think there's thinking through that and having the right framework in place to tackle that.
Agreed. So I think we should not talk about the regulation of Bitcoin or those blockchain-based assets, but we should focus on the services, that we regulate the services in the financial industry, but only in the financial industry and not on the tech side, right? So there should be the freedom to do whatever they want.
Okay.
Yeah, I disagree with the initial premise of Bitcoin was started as anti-government. I think Bitcoin at its core, if we are to talk about the first asset that we all know about, is predominantly just a solution to a long-standing computer science problem. That means that it's a technological innovation and advancement that makes things faster and more efficient. And with that respect, perhaps some early supporters were more of a libertarian anti-government variety, but that has nothing to do with the underlying asset or the underlying technology. And so I'm not sure we were anti-government and then aren't, because I'm not sure we were anti-government in the first place.
Okay. Are there specific things about the crypto? Well, let me rephrase. Some people have suggested to me that much of the crypto universe could be just fit within existing regulations. Do you think, though, that there are some unique things about crypto, and perhaps like miners, as we don't have any equivalent of miners in the bond market, for example. Do you think there are specific or unique factors about crypto that require unique and specific regulations?
I think it will inevitably come up that there are, to Ryan's point about future technologies, I'm not sure we have every ingredient in place, and it would be completely wrong for us to think that. I think in the U.S., the main test, the Hany test, is based on this random guy in Florida with orange groves a century ago, right? And we're still talking about that. And so I think it's inevitable that when we talk about billions of dollars, trillions of dollars, thousands, millions, hundreds of thousands of tokens, inevitably, perhaps we don't have all the ingredients, and perhaps we need to innovate on the regulatory side just like we have on the technology side. There's nothing wrong with that either.
Yeah, I think some of it will fall into stuff that we already know. We've talked already about KYC, AML, like standards. If you're a service provider in a financial industry, then there are certain things that we know. But then there are other things that are completely new and similar. When again, the parallel is overused. But when the internet came up, like, what is this thing? What is it going to do? And what do you end up regulating, not regulating, right? So I think, regulation will need to keep being aware of what those things are, because if you make everything fall into existing stuff, that's actually probably going to hinder innovation.
So an example of this is the UK's government's trying to grapple with how do you define a custodial wallet versus like an open source wallet that comes native with the Bitcoin source code. And where do you draw the line of, do I have power to move a transaction for you? And what defines a custodian infrastructure in a smart multi-sig, meaning multi-signing smart contracts arrangement. So that's an example. We think we know what that is, right? It's the ability to sign a transaction is kind of what their definition has started out to be. But that's an example that we both discussed here, is that there will be 50 more of those things in the next couple of years. And we don't know yet. But let's just start with getting the service providers under the regimes and the regimen of the top regulators. Then it's a work in progress.
Okay.
And we're there. We're very close.
I think it's important as well to define what each crypto is, so we cannot put everything into one bucket.
Which FINMA's done.
Taxonomy, yeah.
Yeah, exactly.
Yes,
we
yes.
have the 4 different pillars, so payment tokens, utility tokens, security tokens, 3.
And even that still need to evolve, right? Stable coins don't fall into anything.
So it was very broadened, right?
Yeah.
So
and even FINMA saying that they could be both A and B.
Yeah.
Yeah, it depends on the stadium, right? If you raise
Yeah, you could start
something
with
for a
that.
platform and the platform is not live yet, it's a security token. And then as soon as the platform is live, it converts into a utility token. And I think that's very important. And then when we talk about security tokens, then again, if you profit from the success of the company, you get dividends or whatever, then it's very similar to the equity laws, and then you can apply those. Right. But we need to find a common global standard for this.
Fantastic. With 1 minute to go, I'd like to ask, we actually have a question from the audience, which I'd like to pose. And they're asking, do you think, you mentioned sort of privacy coins or the idea of kind of increased privacy. And the question is, do you think governments will go to, well, how do they put it? Do you think they will go a long way to try and do all they can to stop privacy coins?
I think probably, but again, it's a moving target. It's like, if this is open source technology where we can adopt zero knowledge proof signatures on top of any other blockchain that exists, it just pay a little bit more in your transaction. So I think that they probably will try, and I think that they will probably fail because you're trying to regulate open source technology and databases, which will move faster than they can get their hands on it. So it's kind of a fool's errand, unfortunately. That's just my opinion.
I think anonymity in general is a society decision, and actually I wouldn't be surprised if certain societies goes with it and others don't. So I think it's a broader society.
I mean, you cannot prohibit anonymity tokens, but you can prohibit financial institutions work with that, or exchanges that they don't offer you exchange into Bitcoin and that cash or others, but that we trade and exchange set cash against Bitcoin with each other, then no one can prohibit you. Okay.
Great. We're all out of time. Marieke, Jan, Hany, Ryan, thank you very much.
Thank you.
Thank you.